John, definitions are great, but today we're actually pulling the trigger on a trade.
Steve, that's exactly what people need to see. It is so easy to get caught in what I call analysis paralysis, right? You learn all the theory, you read all the books, but you never actually place a trade. So this is great. We're going to solve that for a lot of people by walking them right through the Schwab trade ticket, click by click.
Exactly right. And to make it super clear, we've broken this whole thing down into 5 simple steps. First, we're going to talk about just pulling the trigger. Then we'll get into setting up the ticket itself. After that, we'll decode that option chain. Then, the really important part, controlling your entry price. And finally, executing the whole thing with precision.
Okay, let's dive right in. Look, for a lot of new traders, the trade ticket itself is the biggest hurdle. It just looks complicated, right? But I promise, every single box on there has a purpose. Our goal today is to make this feel as simple as ordering a pizza. That's the key, isn't it? It's all about moving from just learning stuff passively to actually doing it. Once you get these mechanics down, this huge barrier to entry, it just completely disappears.
And this is the tool we're going to be using right here on the Schwab platform. It's called the All-in-One Trade Ticket. And you can think of this as command central for all of your options orders. We're going to break down every single part of it for you.
So, let's get into the nitty-gritty. The very first part is just setting up the ticket, basically telling the platform what it is you're trying to do. These first couple of steps are absolutely foundational.
And it really just starts with 3 simple actions. First up, you're going to enter the ticker symbol for the stock you're watching. Second, from that little strategy drop-down menu, you're going to select options. And third, you specify that you're looking to trade a call. And it's really important to pause and remember why we're choosing a call here. A long call option is a bullish strategy. We're doing this because we think the price of that underlying stock is going to go up. That's the whole thesis behind making this trade in the first place.
Okay, so once you've made those first few selections, the platform is going to pop up the options chain. And this is basically the menu where you're going to choose your specific contract. You'll see all these different expiration dates and a whole list of strike prices. From this menu, we got to pick our contract and, more importantly, figure out what it's going to cost us.
The easiest way to think about the ask price is to picture a price tag in a store. It's what the sellers are asking for that contract right now. So if you want to buy it immediately, that's pretty close to the price you're going to pay. It's your starting point. And hey, here's a little pro tip for you. As you're looking at that chain, you're going to see columns for volume and open interest. You want to look for contracts that have higher numbers there. That's a sign that there's an active market for that specific option, which usually means you're going to get better, tighter pricing.
So let's just say we've picked our expiration date, we've picked our strike price, and we look over at the chain and we see an ask price of $2.50. Now, a lot of beginners might look at that and think, oh, great, this trade is only going to cost me a couple of bucks. But that is not the case. And this is probably the single biggest gotcha for anyone new to options.
That's it exactly, Steve. And this is where that crucial options multiplier comes into play. You have to remember, every single standard options contract in the US represents 100 shares of the underlying stock. So you got to take that price you see, that $2.50, and multiply it by 100. That means your actual cost, or what we call the premium, for one contract is $250, plus any commissions. Forgetting that multiplier is a super common and very costly mistake.
All right, so now we get the true cost. Let's talk about what I think is the most important decision you're going to make on this whole trade ticket, controlling your entry price. This one little choice can have a huge impact on your trade's profitability right from the get-go.
So here's the deal. You basically have 2 main choices, a market order or a limit order. Now let me be really clear here. I strongly advise against ever using a market order when you're trading options. Why? Well, the difference between the bid and ask price, we call that the spread, can sometimes be really wide. A market order just fills at whatever the current ask price is, and you can get a really terrible price. A limit order, though, that puts you in complete control. You tell the market the maximum price you are willing to pay, say $2.50, and your order will not fill for 1 penny more than that.
That is the perfect way to put it. You are the captain of the ship. Using a limit order is how you take command. You're telling the market your terms. You're not just taking whatever price some market maker is offering at that split second. It's all about precision and control, not speed and convenience.
Okay, we've set up the trade, we've figured out the price, and we've taken control with a limit order. Now we're at the very last step before this thing goes live, the final review.
And you really want to treat this screen as your last line of defense. Go through every single detail. Is the ticker symbol right? Check. Did you confirm the exact expiration date and strike price you wanted? Double check. And most importantly, make sure your order type says limit and review that total estimated cost. Taking just 10 seconds here can save you from a massive headache down the road. Once it all looks good, you're ready to send it. And with that final click, the order is on its way. You've done it. You've successfully navigated the trade ticket and placed your first call option order with total precision and control. But, that leads to the next big question, doesn't it? The order is sent. What happens when it actually fills? Where does it go, and how do you manage it from here? Well, we'll cover that next time.